Hi, this is Hyperwave. I'm Leah Wald, and I'm here with Tyler Jenks. And I don't know if you saw it last night, but Tyler was on with Tone Base yesterday for an awesome interview. So we'll definitely post the link again, but it's definitely worth watching. Very, very interesting. So today we're going to actually be fielding a lot of questions that we've been getting after that interview. Thank you, everybody, for writing in. On that is, again, on the stop and reverse points, the SAR, parabolic, GBTC, a couple more questions. Obviously, we're going to talk about Bitcoin prices today. And then specifically the name of our vlog today, the two horizontal lines that we are interested in at 10,100 and also 11,100. So with that said, turn it right over to Tyler.
Thank you very much, Leah. Yeah, we had a lot of fun last night, covered a lot of different topics, and we've had a terrific response in terms of questions. I know Hyperwave is a new concept for most people. If you go back into our earlier vlogs, there are a number of them that go into specific examples. What I tried to do is I just tried to build slowly the idea of what a hyperwave is. Last night, we went into a lot more detail, and you can probably just listen to last night's presentation with Tone Vase and get a lot more out of it. But today, what we're going to do is there were a number of questions about these two parallel lines I keep talking about on the Bitcoin chart that are horizontal trend lines, one at 10,100 and one at 11,100. I'd like to spend a minute telling you why I believe those are significant. And to do that, we'll just quickly go to screen share. And what you're looking at are those two parallel lines. And we're looking at a time frame that's a one-day chart of Bitcoin prices. And it goes from 5,500 at the bottom on the left up to the peak at 19,666. And then it includes the drop all the way down to the low at 5,920. And I've superimposed these two lines, these two horizontal trend lines, that it's difficult to see why they are there unless you go to smaller time frames. But first, what I'll do is I'm just going to zoom in on the first time those lines became important to me. We are on our way up from below 5,000 all the way up to 20,000. So number one, we know this is a very significant move because it's 4x, 4 times its value in a very short period of time of a little less than 2 months. So when you look at something like that, you look at a trend of anything, but particularly with Bitcoin and the cryptocurrencies, what you want to start doing is looking at these periods like where my cursor is of flatness. There's one here, there's one up here about 8,300. And then there's this kind of wild action that starts taking place. Now notice before that point, all of the bars are fairly similar. But now all of a sudden you get this big spike up on this particular day, which is November the 28th. On November the 28th, all of a sudden there was a tremendously large bar or candle that by the end had come all the way back down and became basically a shooting star, or in this case, because it closed negative, it represented a break in the uptrend and a reversal candle. Okay, that's interesting. So you should take note of that in real time as that's occurring, because you don't see that anytime during the previous month. Then note that the bar or the candle in front of it to its left came up and stopped at my line, which I didn't know was a line at the time, but we do know today at 10,100. It actually got up to 10,102. The next day, this huge candle that became a reversal candle closed below that line at 10,100. The next day, we broke up through that line, but closed below it. The fourth day, we opened below that line, went way above it, and closed above it, but did not make the next parallel line, which at the time, in real time, we did not know existed. So all of a sudden, 4 things have occurred over 4 days, all of which were a little bit unusual relative to the uptrend we were in. So that's your first clue. Then a couple of interesting things started happening at the 11,100 line. The next day, we broke through it, but closed beneath it. The third day in this series, we opened below it, ran way above it, came back and closed above it, but not by very much. And on the fourth day in this series of candles, which are standing out to me as unusual relative to what came before it in this uptrend, we opened above the line, closed above the line, and the following day, the open, low, and close were all above 11,100. So now you've got several clues that both the 10,100 and the 11,100 line mean something. And I'm going to give you a little philosophical background on that in just a second. But let's continue up. From that congestion around these 2 lines, we had an explosion that on the next 2 days ran from a low of 11,400 to a high of 16,700. Okay, that might be coincidence. It could be coincidence that what we had seen on the 8 previous trading days in no way were establishing the fact that this market wanted to explode to the upside. But later on, we will see that's not the case. It wasn't a coincidence. These became very important resistance and support lines over and over again after this initial fact occurred. And then you'll notice the correction of those 2 big uptrend lines could not make it back down to 11,100, and therefore we were able to explode even higher to the ultimate high of 19,666. Okay, that's a lot of verbiage, but I want you to understand the way I look at the progression of a trend or the reversal of a trend and what happens subsequent to that progression. So now we didn't know it on this day, which was October the 16th, that was the ultimate high. We had no way of telling. But it turned out to be, and then we began sharply lower for 5 trading sessions. And now everybody sits up and they begin asking a lot of questions. What the heck is going on with Bitcoin? And then you had this very key day in which the downtrend from the top attempted to reverse. It got all the way down to our line at 11,100 approximately. and then shot back up by the close.
Tyler?
Yes.
Is it important to note that on that day, you're seeing extraordinarily heavy volume as well?
Absolutely. We're not talking about volume right now, but it's a very important factor when trying to understand what these trend lines, these horizontal trend lines, are doing. But they're not the only factor. There are a lot of other technical indicators that can be overlaid on this kind of analysis. What I'm going to try to do today is just keep it simple in terms of the lines themselves, why I believe today, after all of this has gone by 2 months ago, those lines are still important. But you're exactly right. This tremendous down volume compared to everything we had seen previously indicated that this was a very important reversal day. And we didn't know it as the volume was coming in, but we did when the price on that day ended up closing in the upper half of the overall candle. And it took all that volume even to accomplish that. But what it did do is for the next several weeks, it kept the price above that low point, which was my 11,100 line. So then as we go across, all kinds of things can be said about all of this back and forth, but I just want to focus on those two lines. Because here on January the 15th, 3 weeks after the test of 11,100, here we come again. We go down, we penetrate the top line, 11,100. We go all the way down to the bottom line at 10,100. And by the close, both lines repel the price back up to close above both of those lines. So now we sit up and take notice again. Okay, interesting. We had that line work back here. We had that line for 8 to 10 days, both of these lines giving us something to pay attention to. And now, weeks later, here it comes again. The next day, look at the action. Big down on heavy volume, as Leah talked about on both of these days. Big down through both of the lines, but then repelling back to close slightly above the 11,100 line. Look at the next day, same activity. The next day, same activity. Then we try to lift off. And this is where the psychology gets very interesting, because now you've got downtrend lines coming, which I have not drawn, and you're trying to retake earlier trends up in here, and not very much volume comes in, but we're still able to lift up away from these two trend lines. The very next day, we're repelled back down right to the 11,100 level, close above it, and then we start this dance. The dance between the two lines. Which one is going to be resistance? Which one's going to be support? And what will it tell us about the future? Back and forth, up and down. So these two lines are key in my mind of the movement up to the peak and the movement down to the bottom. And then when we finally close below both of those lines for the first time, we know we're in trouble. And even the day that tries to reverse it with what looks like maybe a reversal doji almost, where we go higher than 10,100, we close right on it, but it's not enough, and we begin falling away, and we keep accelerating all the way down to the low at 5,920. Okay, so that's the big trend up to the very top, the big trend down to the very bottom. And now we've been struggling for the last 3 weeks to regain an intermediate term uptrend and reverse this big drop from 19,066. And lo and behold, what do you see as we approach these lines? 10,100, the dance begins, back and forth, attempted breakaway, back and forth, dropping back to the lower side of that. Here's a small gravestone that looks like we're going much lower, and a lot of analysts were saying, uh-oh, we're in trouble, including myself. On this day, the day before today's candle, it looked like we had to go lower. But amazingly today, and why I was fairly upbeat about the price action last night, is we regained 10,100 in an unexpected way following these last 2 candles. But we did it, or the buyers did it relative to the sellers. Way too early to tell if we're going to be able to make it up to 11.1, start a dance between them, and then way too early to tell if we're actually going to be able to finally break away to the upside of 11.1, or we simply begin dropping down again. But we're in that zone again, thanks to what happened today. So that's why I keep talking about these 2 lines. I'm going to just throw out one other philosophical point that I use when I'm looking at trend lines. To me, a trend line is not a point that is extended. It is actually a field. And I don't want to get too deep into that, but many of you know what I'm talking about in high energy physics and cosmology and in physics in general, talking about fields versus lines or points. We can get into some detail about things like photons, which sometimes act as if they are a particle moving in a straight line. Other times they act as a wave that has amplitude and therefore forms a small field. And then we can go larger and larger. But when I see 2 lines like this, I don't look at them as lines as much as a zone in which things happen below the zone, slightly above the zone, but more importantly, when there's 2 of them, that the entire area between those 2 lines is a field, like a gravitational field, like a magnetic field that has the ability to attract or repel price. I would love to get into discussions with people that know a lot more about it than I do, because I'm fascinated by the many times that I have made that observation when doing my analysis. So that's enough for where we are right now in terms of the price relative to those 2 lines. Leah, I think we had a question also about the stop and reverse points. Yeah.
So specifically, and I'm curious about this one too, is how to calculate it. We talked about in our last vlog, you showed the importance of it, but it would be really interesting to know exactly how you were able to calculate it.
Yeah, great. And we had several people ask that question that said they were trying to do the same thing I was on TradeView and couldn't get the dots to line up the way I had shown them.
Right.
Just a couple of observations. One is right now I'm on Bitcoin wisdom. I like the simplicity of the charts, but I am going to be moving full-time to TradeView. That will clear up some of the differences you see. But on a number of these sites that allow you to do charting, I also love stockcharts.com. They used to be called Big Charts. I use that extensively. Some of you might also. Up at the top of Bitcoin Wisdom, there's a settings, and at the bottom of the settings, there is something called indicator parameters. And if you click on indicator parameters, you can see what numbers they're using for moving averages, for Bollinger Bands, for MACD, stochastic RSI, directional movement, et cetera, et cetera, et cetera. There's no settings there for stop and reverse points. And right here under the settings bar is the SAR listed as a main indicator. I'm just going to click on that for now, so everybody can see what the questioner was talking about. On almost all charting techniques, the various technical tools are calculated relative to the time frame you're using. So right now we're looking at a 1-day time period. Each of the candles are 24 hours long. And this is the calculation of the stop and reverse points, which showed us from the bottom in an uptrend until this particular bar reversed down into the stop. And then the stop is calculated above the price and begins a parabolic move down until a bar, a candle, moves up into the center of that circle. And Wells Wilder Jr., who came up with these calculations, used his own time frame. And you can change it on a number of different exchanges. I cannot change it, as far as I know, on this particular exchange. So I like the way this one is calculated. As we look at the downtrend from the top, how it kept you in the short trade, or the other way of looking at it is kept you out of a long position, even though you had periods of strength, until we begin to accelerate down in price. And whenever the price begins to accelerate sharply up or down, you will notice that the stop and reverse points begin to space themselves out, and it gets more and more difficult to stay in a trade. Let's look at a very short, much shorter period, 1/6 the time, which is on our 4-hour. And you'll notice that even though the 1 day was still in a downtrend, the activity we've seen because of today's big bar has reversed from down to up relative to the stop and reverse point. So the questions that we were getting asking about the difference between these two charting tools, one on TradeView, one on Bitcoin Wisdom, I believe whoever was asking those questions might just try changing the timing of the bars that they're looking at. And the other thing I wanted to do, Leah, is get into a little more detail on Hyperwave, because boy, we had a lot of questions after last night. You pointed out a half a dozen or so to me, and how those related to GBTC. So let's do this. Let's pull up this chart, the one that we used last night, which is the chart of the Hyperwave. 7 phases, 4 up, 1 down, 1 back up, and 1 down. But number 1, 5, and 7 are all indicating by the red numbers 1, 5, and 7, that all price activity is below these lines. You never break above the 1 line, because when you do, you're starting at 2. Here on 5, you never break above the 5 line in terms of price, because when you do, you begin the 6. And in the 7, you never break below the 7 line until you get all the way back down to the beginning. That's basically the way this thing works. We'll go into a lot more detail in other vlogs, where we're going to take a look at each of the phases and describe why and how they're calculated. But then the reverse of what I just said is true when you go to 2, 3, 4, and 6. What these green numbers mean is all the price activity is above the line. If you break below the line, that ends the hyperwave. Which means if you break below the 2 line on a weekly closing basis, there is no hyperwave. It's over. You'll never see a 3, 4, 5, 6, and 7. And I said yesterday that only 1 out of 4 phase 2s will result in hyperwaves. 3 out of 4 will not. But if you are lucky enough to go all the way to another phase change in terms of the angle of ascent, and the price begins moving above this 3, remember we're talking about years here, many months or years for each phase. We're not talking days or weeks, certainly not hours or short term. We're talking long periods of time. So even though these lines look short, we could be talking 2, 3, or 4 years within each of these phases. Sometimes only 3, 4, 5, 6, 7, 8 months per phase, particularly with cryptocurrencies. But the point is that when you go from a 2 to a 3, you jump from only 1 out of 4 working to 85 out of 100 working. And what do I mean by working? I mean that we will not break below phase 3 85 out of 100 times. We will see a phase 4, 5, 6, and 7. So the guts of the hyperwave is determined between phase 2 and 3. Once you get up into 4, you will go 5, 6, and 7. I have never seen an instance where that is not true. 2 and 3 determines the probability of the wave going all the way through all of its phases. Once you get to 4 and you can identify it, you're going to a peak. And unfortunately, that means after that peak, you're going all the way back down again. Okay, let me give you a specific example. And we talked about this extensively last night. You are now looking at the hyperwave as I mark it for GBTC, the Bitcoin Investment Trust. One of the things that got me interested in where we were on Bitcoin was this chart. Because what this chart is showing is that the phase 1 of GBTC lasted from the time it came to its inception all the way until early 2017. It is true that there are big moves under this blue line, and some of them even took on the scale of a hyperwave over a very brief period. But the way I look at GBTC price is I'm looking at these 4 points here. And my interpretation is that because each one of these surges in price came back to or close to this line I have drawn in, that GBTC is only in phase 2. Whereas back on Bitcoin, we were trying to determine is it possible we're already at phase 5, 6, and 7? And this chart got me to rethink the size of the hyperwave that we are seeing develop in Bitcoin.
Tyler?
Yes, please, Leah.
So, we're both very interested in GBTC. What's interesting to me, and I guess the question is that GBTC obviously isn't Bitcoin, follows Bitcoin. What's also interesting is what happens with forking. So my question to Hyperwave is it still following, and will it still follow the same rules that you utilize to determine the Hyperwave in Bitcoin specifically, given the differences, as well as what you began to speak about last night of with all the new smart institutional money, as well as very investors who have been in the game for a very long time and know what they're doing, as well as the ETFs down the pipeline and potentially other securities. Will that potentially change the way that you're able to evaluate if it's in a hyperwave?
Yep. Those are all really key questions, and I wish I had answers for them. And I don't mean to avoid the answers, but let's take a look at something here. This is Bitcoin, and it goes back far enough that basically we're looking at the same time period that we are looking at GBTC. So I'm going to move this over just a little bit, and I'm going to draw in, I'm going to take the stop and reverse points off because they're cluttering this up. I'll keep these two parallel lines because they fascinate me so much. And I'm going to draw in a very simple line here. Okay, now I'm going to go back to GBTC. And notice the similarity between this chart and this line coming down to the bottom of this candle, which was the low of Bitcoin at 5,920. And notice that this is clearly a phase 2 line. Moving this over again, everything above my phase 1 line stayed below the line. There are no weekly closes above that line until this breakout. Therefore, I know that the rule of Hyperwave is intact as this begins some sort of an angle, which early on we don't know where it is. We have some idea on this second dot or the second circle that I've got drawn in, because the price went way above the phase 1 line, then went sideways for 2 months into some sort of a point, and then we accelerated up from that point. That gives me the clue that this will probably be the angle of phase 2. The same thing happened at this point in GBTC on this weekly, I'm sorry, this is actually a monthly chart. We went sideways, and before we could break this phase 2 line, we took off and went all the way up to, in this case, 38 from a $2 base, 19x on this particular chart. And then on the correction of this huge move up, it sure seemed to me like that was the end of the hyperwave, except for the fact that GBTC came right back down and did not break this phase 2 line, which means in hyperwave parlance that the phase 2 line is still intact. And all we saw here, now this is my current interpretation, all we saw here with this huge move was the same as these moves up from the phase 2 line, just exaggerated, which then brings me back to our Bitcoin chart, keeping this chart in mind. Now back to the Bitcoin chart. When I draw in this line, it seems very similar to the one we just saw to GBTC. And anyone that does not understand all the peculiarities of the Bitcoin investment trust relative to the price of Bitcoin needs to, if you would, go back to the vlog that Tone had last night that lasted almost 2 hours. In the end of that, we spent a lot of time talking about the internals and the logistics of GBTC. GBTC is not Bitcoin, but GBTC follows Bitcoin because it's made up of Bitcoins with an overlay having to do with the calculation of how many of them make up one Bitcoin. And we don't have time to get into all of that today, but just take a mental picture of what you're looking at here. And all of a sudden, because this bar, this candle that broke down through what I now believe could be a phase 2 or a phase 3 line, held the price and repelled it back up. And the price of Bitcoin ever since has been going up until, once again, it hit the 2 magic lines, and then has been trying to figure out what it wants to do. You don't have the answer to that. I don't have the answer to that. All we can do is continue to follow day by day, week by week, all the technicals going into this incredible asset class, with the overlay now of the hyperwave to give us some sense where we are. So I think that's enough for today. We've covered a lot of different things having to do with where we are with Bitcoin, where we are with hyperwave, and where we are with GBTC. And with all of that, and thank you for the questions, Leah. It makes it a lot easier when we've got those kind of observations, and you've got the time to go through all of the various questions that have been coming in since last night.
Yeah, absolutely. Tyler, thanks so much. Everybody, thanks for watching. And till next time.
Very good. Thank you. Bye-bye.